Welcome back to another video, everyone. In this video, we are going to break down wedge patterns. We are going to cover what are wedge patterns, types of wedge patterns, and how to identify and trade the wedge patterns. So first and foremost, let's jump right into it. What are wedge patterns? So wedges form as a stock's price movements tighten between two sloping trend lines. So basically, a wedge is whenever the stock's price starts getting tighter and tighter alongside the trend line. So for example, in here, you can see this is a rising wedge. The price is getting tighter and tighter. This area starts getting tighter and tighter. That is a wedge. On the downside, this is a falling wedge. You can also see that the price is getting tighter and tighter and tighter, and it's not moving as much anymore. So for example, let's say a stock makes a move up, right? It starts moving this much, and then it starts moving less and less and less and less. This becomes a wedge. Even though it's going higher, the wedge is being formed, showcasing that the price movement in between that area is getting smaller and smaller. So we have two types of wedge, two types of wedges pattern, right? We have a rising wedge and we have a falling wedge. Now, if you look at the rising wedge, you can see stock makes a move up, pulls back, goes higher, pulls back, goes higher, pulls back, goes higher. And now if you notice something, this price movement from this move till this move till this move are all getting smaller and smaller and smaller, right? Now, if the stock tends to break one of the trend line areas, there's a high possibility that the stock may possibly go down. That is a rising wedge. We then have a falling wedge. A falling wedge is the opposite. Stock is on a downtrend. You can see formulates price between this wedge formation and the formation that it's moving between. The price starts moving in smaller and smaller phases, right? So rising wedge. So a rising wedge is a reversal chart pattern. Support trend line rises at a steeper rate than the resistance line, right? So this rises faster than basically the resistance trend line. Because this rises faster, price movement starts slowing down. Momentum starts slowing down for the stock. Stock price gets tighter and tighter, showcasing that momentum is, that the stock is losing momentum. Even though the stock is making higher highs, if you notice, it's going higher and higher and higher and higher, and higher lows, higher lows, higher lows, higher lows, which is a good sign. Momentum is still decreasing. So let's say this move right here was $1. This move right here goes to, let's say, 80 cents. This move right here goes to, let's say, 40 cents. This move right here goes to 20 cents, right? Or in other terms, let's say this is $10, this is 5, this is 3, and this is 2. Move starts getting smaller and smaller and smaller. Momentum starts going down, and as soon as there's a big move, there's a high probability for this rising wedge to showcase that sellers are in control and the stock starts to move down. So here's an example. So in an uptrend, you can see stock starts moving up. The prices get tighter and tighter and tighter. As the prices get tighter, whenever it breaks out of the lower trend line area, as you can see here, strong red candle breakout. Let's say there's high volume. This would showcase that there's a high probability. Once again, I keep saying probability because I want to put that in your head. High probability that this may possibly go down. That is on an uptrend. Now, if a stock is on a downtrend, right? Let's say stock is on a downtrend and there's a rising wedge, you can see the low gets higher, the high gets higher, right? The price gets tighter and tighter and tighter and tighter. And as soon as the stock makes a big move, there's a high probability that it will continuously keep going down on a downtrend. You can see right here, stock is moving in an uptrend, price starts forming a rising wedge. You can see it starts losing momentum, starts moving lower and lower and lower, and then boom, look at those nice red candles. Strong red candles, strong move down. That's giving you a confirmation. Short, enter right there. And you can see, keeps going down and down and down. Strong move right there. That is a rising wedge. Next, we have a falling wedge pattern. It's also a reversal chart pattern. Resistance trend line, which is right here, decreases at a steeper rate than the support line, right? Stock's price gets tighter and tighter because of that. You can see once again, let's say this moves $3, this is moving 2, this is moving 1, and so on. The price formation is getting tighter and tighter and tighter, which showcases that the stock is losing momentum. Now, the moment the stock makes a big move up, let's say it breaks outside of the upper trend line, that is giving us a high confirmation to now take on a trade. Here's a falling wedge on a uptrend. Stock goes up, falling wedge, big move up, continuation. This is kind of a continuation pattern. Right here, you can see stock is on a downtrend. It is now a reversal pattern. This is where it's primarily found. Here, sometimes people mess it up with the flag pattern or something along the lines of that. But the whole idea is, once again, remember, if a stock makes a move up, it needs to take a break. It's taking a break, right? If it forms a wedge like that, the moment you see a move up, a strong move up, that's giving you a confirmation to enter. Same thing here. If a stock is in a downtrend and it forms a strong wedge, at times there are nice confirmation trades right there. If you look right here, falling wedge pattern once again, right? Stock goes in a downtrend. Look at the price formation. It gets tighter and tighter and tighter and tighter and tighter. And as the price gets tighter, look at the move up that happens. The stock starts rallying, right? So the moment what you want to take away from this is the moment the price starts getting tighter and tighter and gets into a tighter range, there is a high probability that there will be most likely a big move up, a strong move on the upside. If you don't see a move up and the move goes down, the pattern has now obviously failed.